Hi there, everyone, and welcome into tonight's webinar. Tonight, we're going to be focusing on investing in the US. Okay, so less so on the trading side and more so on the longer term. From the trading point of view, I'm going to show you how to transact into the US markets. Okay, the two focus points really are going to be how do you pick a US stock for a medium to long term hold. And then, we'll talk around the markets, the difference between the Australian US market, that sort of thing. And then that's going to lead us into showing you how our platforms work trading into the US markets as well. Before I get started, guys, just make yourself comfortable. Go get yourselves a drink. This go for around about an hour, 45 minutes to an hour, something like that, depending on Q&A and that sort of thing. Don't be afraid to ask questions, guys. Please, if you've got a question about something we're going through, pop it straight into the Q&A box. If you don't want to ask the question here, you can always give one of us a call, okay? Always happy to pick up the phone and have a chat. All right, so let's get stuck into it. Before I go any further, don't forget that any advice contained within this presentation is general only, so it doesn't consider your personal circumstances, and you need to decide for yourself whether it's appropriate for you. All right, just a little bit about us, okay, if you don't know who we are, okay. We're presenting from Emerald Financial today. Emerald Financial, we're focused more on research, so fundamental type analysis, quantitative, qualitative, okay. We also use a bit of technical analysis in finding our stock picks, but it's more about investment advice, stock screening, analyzing a stock from that medium to long-term sort of timeframes, portfolio management and execution services. Okay, so we run a subscription service where we give recommendations. We have unique scoring to help you screen and filter through the market to find stock picks. The Trader Circle side of the business, that's been around a bit longer, okay, for about 16, 17 years now. Trader Circle is a full service trading house is probably the best way of saying it, right? We do a lot of education services around that. It's more derivatives focused, so we're trading very short term, okay, a couple of days to maybe a couple of months using options and mini warrants and things like that. So we do a lot of education and training around derivatives in the Trader Circle side of things, okay? So we do run two brands, okay, and we've separated the two businesses for a reason. Trader Circle, you think short term, you think technical analysis. Emerald Financial is more around that longer term portfolio that you want to build and hold for years and years and years. Okay. All right. So really, next sort of thing I'll just sort of say is go through who's talking tonight, really, right? So you've got myself. My name's Tim Michaelides. I've been with Trader Circle for about 10 years now. I'm one of the founders of Emerald, as is Sam Green. Sam has also been at Trader Circle getting pretty close to 10 years now as well. Sam is an equities analyst. He's a derivatives advisor. He knows a lot about equities markets, guys. Okay, so he's a wealth of knowledge. He has actually designed our quantitative scoring. Okay, I've been using that quantitative scoring for just over a year and a half now. It has really improved my trading and investing, guys. I have to say, he's done a great job with those scoring systems. We'll go into that a little bit more in detail, but yeah, basically what I'm going to do now is actually hand you over to Sam. Okay, he's going to run through a few things to do with the US market. He's going to compare the types of analysis we do on the Australian to the US as well, just to give you a few hints, right? So, we got into the US markets in a bigger way maybe a year and a half ago. We've been testing our scorings in the background since, and now this year we've launched into the US as well. So as we've gone through this process, we've had to do the process ourselves of looking at both markets and going, okay, well, when looking at the Australian market, what's relevant? And then when looking at the US markets, what's relevant, okay? And what are the best bits of information to look at when investing into the US market? And that's what Sam's going to go through now for you, okay? So just give us a couple of minutes. I'll hand it across to Sam, and then I'll come back on a little bit later on, and I will run through how to use the platforms to trade into the US market. Okay, guys, just one moment. There we go.
All right, guys. Beautiful. All right, well, hopefully you can see my screen. And yeah, thank you very much to Tim for that lovely introduction. So yeah, tonight, guys, we're here to talk about trading and investing in the USA. And, I guess the first place to start would be, why would you want to trade and invest in the USA? Well, there's a multitude of reasons. We're all aware that it's the biggest equity market on earth. It's home to the largest stocks. There's tens of thousands of listed businesses over there. Each and every day, there's a ton of them moving, strongly higher and lower. And it's a place where uh, businesses go to build themselves. And as a result, it's got some very, very fantastic equity markets. So this is something that we've always wanted to be able to provide for our clients, a window into the USA, an easy way of accessing US stocks, an easy way of researching them, and an easy way of getting invested into the largest equity markets on earth. So I guess primarily the first thing that attracted us to US markets was the significant outperformance that they'd experienced compared to our own market, or indeed many other markets around the world. So this is a 10-year chart of the US S&P 500 index, which is the blue line, and our own market, which is this orange or gold line here. Now, when you see most of these comparisons, you actually see a straight comparison of the S&P 500 versus the XJO. But that doesn't really do any justice to our own market, because our own market tends to be a very high dividend market. So in this comparison, we're actually looking at what's called an accumulation index. And this means it's a comparison where the dividends have been reinvested into the index. So this factors in even the high dividends of our Australian market. And we can still see that even after those dividends, the US markets come out ahead. There are periods where they come, outperform a little bit, but there are periods where they have significant outperformance. And since the bottom of the COVID era in, February, March last year, they've experienced significant outperformance. So why is that? Well, one of the first things that we like to discuss when we compare US markets to our own market is the difference in the sector composition of these markets. In the US, they have a very large amount of high value tech stocks. They have a large amount of healthcare and discretionary stocks. And these are stocks that tend to be, what we call growth stocks, particularly for the technology stocks. These are stocks that tend to have higher multiples of earnings, higher revenue and earnings growth. They tend to pay lower dividends. And over time, they tend to see greater share price performance. So that's one of the reasons why we've seen their market, experience a lot more share price growth, is because they've had a lot of growth in the financials of the underlying businesses. If you compare that to our market, we're predominantly financials and then materials being in our second place. Now, both of these are traditionally what we call value sectors. And what we mean by that is they tend to trade at lower valuations, lower share prices relative to earnings, and they tend to have higher dividend yields, but they tend to experience less growth in earnings, less growth in revenues, and as a result, less growth in share price over time. So investing in Australia is great. There's a lot of very, very fantastic investable businesses here, but they can be at times a little bit dull, a little bit lackluster from a share price perspective. And, a lot of the largest blue chip stocks that we can invest in, well, they're sitting there and paying dividends as opposed to experiencing extreme long-term share price growth. All right. So when we compare value and growth, usually we say that growth outperforms from a share price perspective. And if we actually look at least in the US, growth has significantly outperformed value stocks a majority of the time. There's only been a very, very small few years, once during the GFC back in 2008, 9, 10, and then again during the coronavirus period, where value stocks have actually outperformed. And it's basically a given that, during periods of consolidation or during periods of economic tightening, people are going to go for the more stable, cheaper businesses, and they're going to avoid paying very, very high prices for very, very high growth businesses. So we still love Australia. We still love a lot of the valuable stocks in our market. And there's also US value stocks that we like. But the remainder of the time, a lot of the time, there's an awful lot to like about going for growth stocks as well. And getting access to the US markets gives us, that angle, gives us that ability to purchase those growth shares. Now, one reason that I brought this chart up to show that there are times that value will outperform is that I believe that for at least, a short-term period, from a few months ago to maybe a few months in the future, I think there's an argument to be made that value could outperform. And I'm just going to touch on that very briefly. So this is a chart here of the US government bond yield curve. This is from our morning market view. So if you ever want to see this chart, you can view our morning market view and gain access to this. And basically what this shows us is that a year ago, this light green line here, or this olive green line here, shows the US government bond yield curve from a year ago. And at the time, government bond yields in the US were extremely low. Now, the current US government bond yield curve is this dark blue line up the top here. And so we've actually seen a big jump in US government bond yields over the past 12 months. And, even last night, we actually saw an additional big spike in US government bond yields. Now, the reason I bring this up is when you actually have spiking yields and quite high yields, you can actually see strong performance from more traditional value stocks. Believe it or not, some of the things that do well in a rising yield environment can be things like banks, stocks that have very, very little borrowing, stocks that might be, considered quite mature and quite stable. And the reason for that is if you're investing in a technology stock, that might be trading at a very, very high multiple of earnings. So essentially, the yield on that share price from an earnings perspective is extremely low. So as government bond yields rise, that yield on a tech stock or a high growth stock becomes comparatively less attractive. Whereas a stock like a bank that tends to trade at a low multiple of earnings, that comparatively higher yield starts to look a lot more attractive. So we actually saw a big spike in US government bond yields overnight. And, believe it or not, the finance sector in the US was one of the strongest performers. Now, the spike in yields overnight, that was due to the nomination of current Fed Chair Jerome Powell for a second term as Fed Chair. And he's viewed as, I guess, one of the more hawkish candidates for the Fed Chair. And what that means is he's likely to continue the current path of monetary policy tightening in the US. So they're going to stop their government bond buying, which is called quantitative easing. They're going to wind that down. And markets are now expecting 1 or 2 interest rate rises in the next 12 months from the US central bank. And yeah, that was really positive for the US listed banks. We'll just quickly touch on a similar thing here. Our government bond yields have also been rising, and it has been a relatively strong period for our banks, although recently across the past month, they have disappointed a little bit. And our view at Emerald Equities is that was because their valuations have become too strong. If you look at a company like CBA, Commonwealth Bank, that was trading on around 20 times earnings to 22 times earnings. If you look at the large US banks, they trade in a much more traditional value range of around 10 times earnings. So the US banks have been performing extremely well during the period of low interest rates rising to higher interest rates, during the period of monetary policy tightening that we started to see. So this is the US government, the US banking index, this white line here. And this is the S&P 500 as the light blue line over the past year to date, or the past 11 months. And we can see that the US banking index has actually outperformed the overall US market index by quite a bit. So the US banking index is up by 36.5% over the 11 months. and the US total share index, or the top 500 shares, is actually underperforming the banking index. So we think that's a factor of those yields lifting off the very, very low levels and starting to return to more normalized yield levels. And as a result, the extreme valuations of some of the technology stocks have become comparatively less attractive. So yeah, so that's something that we've actually focused on as a theme in our investing recently. And I'm just going to talk to one of the recommendations for US stocks that we put out recently. So I'm going to switch over here. Bear with me one moment. All right, so this is our Emerald Equities platform. Basically, it's we believe as much fundamental data as you could possibly need for investing in the Australian or the US market. We provide recommendations, we provide research, we provide analysis, we provide updates, and we also provide our quantitative scoring. I'll touch a little bit more on that later, but we can see, we can see an example of it here. This is the Emerald score, or the total score, and on our front page, we just basically keep a track of the stocks that score best. So these are the top scoring stocks in the Australian and US markets at the moment. So I did just want to touch very quickly on one of the recommendations that we did recently. So this is Goldman Sachs, which is a large, I guess, US bank. It's more of a diversified financial. But because of that outperformance of the banking index, because of the rise in US government bond yields, that's what attracted us to this stock. And I just wanted to give you guys an example of how we provide a recommendation. So we do our analysis. We basically go through and read other analyst reports, look through broker price targets, read all the data, and we type it up and summarize it for you. More importantly, though, we also provide our proprietary scoring models on all the stocks. And this is something that first highlights an individual stock to us to look at. So essentially, this is the detailed report that we basically come up with. When we put out a recommendation, we send this out to our clients. We've got our analysis. We show what our scoring model indicates for the stock at that point in time. We provide our price target. In this case, we're bullish on Goldman Sachs to $480 a share. We show you where all the other analysts that we follow are tracking the share at the moment. Of the 28 analysts that cover Goldman Sachs that we have access to, 13 are a buy, 5 are a strong buy, only 1 is a sell. And we show you, basically where their price targets are, up around 450 a share. We are a little bit beyond that, but we also apply our own technical analysis to come up with these price targets. We then show you what the price has done recently, give you a sort of fundamental data view on it. All right. So that's a stock that we recommend, and we do a lot of the analysis for you. But if there is a stock that you want to look at, or if you want to dive into greater detail, we also provide a bit of an access there for you. Apologies, I think I may have been logged out. Yeah, sorry guys, I think I may have been logged out. Just bear with me a second. Maybe not. Sorry, sometimes I do get kicked for inactivity, and I was sitting on online for about half an hour before we started, but it looks like we're all good now. All right, so this is our company page. We provide company pages for pretty much all of the Australian listed stocks and a very, very large amount of US listed stocks. We provide them for over 5,000 US listed stocks, which isn't quite all of them, obviously, but it's a very large majority of the sort of medium and large US listed businesses. So I just wanted to quickly show you, some of the information that you have access to, when looking at a stock on our website. And basically, I also wanted to run through our scoring models. This is something that I've designed myself and I'm quite proud of. But basically, we've created a series of proprietary scoring models that look at all the fundamental data, look at all the numbers, and come up with a overall number out of 100 that people can use to identify investment opportunities. Now, these numbers out of 100 are basically where this stock ranks compared to other US listed shares. we spent quite some time trying to adapt our scoring model for the US market because, their shares are a bit different to ours. How they report is a little bit different. What their market looks for in shares is different to what our market looks for in shares. And so we did have to adjust our model a little bit to make it a little bit more compatible for US listed businesses. And so this is our US scoring system. For Goldman Sachs, the dividend score is 94 out of 100. Basically, we can see that they pay a very strong dividend compared to the majority of US listed businesses. And keep in mind that in the US equity markets, dividends aren't as big a priority as they are in our equity market. We've got a quality score out of 100. Basically, that means how consistent their business is, how large the business is, how diversified it is, and how consistently they deliver results. There's the price momentum model. Basically, the price momentum is a technical analysis indicator, and this is actually one of the most useful ones that we find. With the price momentum model, if a stock is scoring extremely well on every other model, except for the price momentum model, that's often a sign that it might be time to start looking at that stock for a potential entry signal. If the price momentum is up around 100, it's enjoying really strong momentum, but it might be a bit overbought. And similarly, a lower price momentum score for a stock that scores highly everywhere else could be an indication that it's oversold or at a great price. We've got a maturity score, basically, again, how large, how stable the business is, how long they've been in the marketplace, how blue chip their name is, how well regarded they are. We've got an all-weather score. Basically, it tries to calculate how well a business is going to weather an economic downturn. We've got a credit score. In this case, the credit score is quite high, and banks tend to have is relatively low compared to the other scores. It is still extremely high. It is still in the top 20% of US listed businesses, but we often see banks actually report a slightly lower credit score relative to their other scores than other businesses might. And the reason for that is they can often be highly leveraged businesses. So banks can have, a reasonable amount of leverage, given what they're doing is borrowing and lending. For all the lending that they do, they have to have a fair amount of borrowing as well. We've got the earnings score. This is a measure of, how cheap the company is relative to its earnings, how much earnings growth they're having, how much earnings growth is expected in future, and, how that future growth is basically priced into the stock. And the growth score is just as the name suggests, growth in earnings, growth in revenues, growth in cash flows, growth in the underlying business. And often this is a fantastic number to look at as well, the growth score. We've also got our Emerald stock score, which is an overall score, basically tallies these scores up and compares the stock to all of the other businesses on the US market in this case. So this is actually basically the first analysis that we do when looking at any stock. And it's a really helpful tool for just screening through the market, trying to find, potential targets to invest in. And when we first started suggesting US recommendations, this was basically how we identified our targets to begin with, before we, did a bit more of a deep dive and looked through a bit more detailed information. And we found it very, very, very useful. All right. We also have the company news, and so far we do not have an Emerald News update for Goldman Sachs, but as we do more writing ourselves on the US businesses, they will appear there. We've got comprehensive dividend histories for US and Australian listed businesses. We've got the key ratios and the financial summaries that are reported, annual and interim. They do take a little bit to load because there is a fair amount of information there. We've got a sector analysis where we basically compare, that business to the sector, to the market itself, to other basic businesses in their field. We've got, more comprehensive balance sheet information for people who are interested in viewing that sort of thing. And not everyone is. And, you don't necessarily need to be to generate a good result, because all of these numbers basically calculate all of that for you. All right, so how do you, identify what scores highly here? Well, we've actually put together a series of stock screeners, where we basically look at all the stocks either listed in the US or listed in the Australian market, and we've basically put them all together in a table that you guys can view, and it shows you, how they score out of 100, in each of these scores. You can actually, filter by different numbers. You can filter by the sectors, and we do have stock screeners that go into a bit more detail about, value, growth, a stock screener for small caps only, and things like that. So we do that for the Australian market as well. This is our Australian stock screener. And let's say we wanted to look at something along the lines of, the banks. We can just filter the sector here, and we can see that if we look at just large cap banks, the National Australia Bank is currently our top scoring Australian bank. If we want to look at more mid cap banks, both Bendigo and Bank of Queensland score roughly the same out of all our banks. So we do provide a way for you guys to narrow it down. You can sort by relative dividend levels. So ANZ pays the highest relative dividend, or has the strongest recent history and expected future history of paying dividends. And you can sort by different factors. Like I said,
Sam,
we also
sorry, we can't see the screener, mate, for some reason.
Apologies. Sorry, you may have. Let's try this again. Hopefully you've been able to see what I've been presenting so far.
Yeah, the last thing I saw was Goldman Sachs, mate. So you're
okay,
good until you switched over to the screener.
Yep, terrific. All right. Sorry, guys. This is our US score screener. Sorry about that. Yep, I'm still presenting this from home. But if we were to look at our screener, we can look at all the banks. In this case, the US listed banks. We can look at different sectors, and we can see what scores well from the large cap US banks. Oh, sorry, in this case, the large cap US energy stocks. So we can see that OKE is our highest scoring US large cap energy stock, and we can click on it and bring it up. Let's bring it up in another tab, but we can click on it, bring it up, and get a bit more information on it. All right, so that is our stock screener. I did just want to run through as well some of the stuff that we provide on the Australian market. Like I said, our market is probably a bit more focused on the value space. And if we actually look at our recommendations, you'll find that they do tend to focus a bit more on the value side of things. So our most recent stock pick was a buy recommendation on JB Hi-Fi. And I will just try and bring that up now. Apologies. Sorry, guys. You're just going to have to bear with me. I am... Apologies here. So we've got our Australian recommendation page. We've got the closed recommendations that we've done. We've got the current recommendations, the most recent recommendations. JB Hi-Fi was our most recent Australian recommendation, and that's a really attractive value stock on our market. That's what attracted us to that one. But we also cover small caps, and I just thought I'd show you this, which shows our recent performance and what we've still got open at the moment. In terms of what we've done in the US markets, I'll just bring that up in a second. And this is what we've got open at the moment, Facebook, Active, and Goldman Sachs. We're really comfortable with what we've got open at the moment. And down here are the ones we've closed, VCTR and AMD. We took these ones as more of a sort of high growth play. And currently we've shifted to slightly more of a value play with the ones we've got open at the moment. You can also come here and see a bit more analysis on what we've opened and what we've closed. All right, guys. So yeah, I just thought I'd touch on that, touch on some of the stuff that we've looked at in the US market recently, and touch on our Goldman Sachs recommendation. If you have any questions regarding these, or if you want a bit more information, definitely type it out in chat, or give us a call, and yeah, we'll definitely be happy to provide you some more information. I'm going to pass it back to Tim here. I think he's basically going to run through how we place these trades on the US market. So we're interested in, say, Goldman Sachs, how we're going to buy Goldman Sachs shares here from Australia, and yeah, something along those lines. So I will pass it back to you, Tim. Yep, I'm going to try it now. 1 second.
Perfect. Thanks for that, Sam. Just give me one moment, everyone. I'm just going to share my screen once more. Okay, you should be able to see my screen now. Just to quickly answer a few questions before I go on. So Neil, so we basically run our scoring system through about 5,500 stocks, which is the larger of those stocks by market cap. So yes, you'll find stocks in the Dow Jones, the Nasdaq, and maybe even some in the mini Russell as well. I'll have to double check. I haven't actually checked. I would assume so, right? Because I know we're covering the S&P 500 Nasdaq stocks, and because we're out to 5,000, you'd have to cover some of the mini Russell as well, right? Now, what I'm going to go through here with the Emerald trading side of things, yes, it is a custodial service, to answer your question there, Neil. So it's not HIN-based. Now, what you need to understand here is there is no such thing as HIN-based US trading. Okay, this is going to confuse a few people here, right? So even though companies like South Wealth, companies like CBA, which are HIN-based here in Australia, okay, just because they're HIN-based in Australia, there is no such thing as HIN in the US market. All US market trading in Australia is on a custodial. Okay, so if you read the fine print of any broker you trade with here, you'll find what custodial that is running through. Okay, with us, we're running through Interactive Brokers. Okay, Interactive Brokers is a very large listed company in the US. We can see what's going on behind the scenes, guys, because it is a listed company, right? It means that every year we get to go in and see if they're making a profit or a loss. Okay, and hence why we chose Interactive Brokers as a custodial structure for us. Okay, so like pretty much every Australian provider of US trading is using another custodial, right? And there's lots of them out there. So yes, yes, we do, but so does everybody else, right? Now, Australian trading through Emerald Equities is also custodial, okay? Because we can't choose to have custodial and HIN with the Interactive Brokers. They just don't do that. But we do offer other services through Phillip Capital for people that do want HIN. Okay. Now, where I stand personally on this, I'm more than happy to trade through Interactive Brokers because I personally can look at their balance sheet every year and know that they're doing okay, right? I know that they've got a lot of risk parameters involved. You can't trade unless you've got the money in your account, guys. If you've got a margin call, they're going to close you out. They're very, very strict, and that's why I don't mind trading shares through them. Okay. So that's where I stand on that. If you've got any other questions around that, Neil, don't hesitate just to ask on the Q&A box here or just give me a ring, right? Okay, so what I'm going to do here now, guys, is I want to demonstrate and just run through what's on offer here. So basically, there's 3 platforms to choose from, okay? One is just a web-based browser, just like this, okay? Very simple to use, okay? Your portfolio button up the top, you can go in, have a look at your positions, okay? This runs on a 20-minute delay unless you sign up for live data. 20-minute delayed is free, okay? You do not have to pay a single thing for any of these platforms other than data fees if you want to go live data, okay? So this is everything that's holding in. This is just a paper trading account, okay? So, you've got your holdings here. You can see the market value, the average price in, daily P&L, and unrealized P&L, okay? So fairly simple position page, okay? Portfolio page. Tells you your daily movements up the top here, and liquidity. You start looking at that when you start looking at other things, right? All right, so basically cash report. Okay, this is an important part of all of this. Because we're a multi-currency, multi-country platform, okay, basically you can go into multiple different currencies. You can actually trade world markets, guys, through this platform, right? It's not just US and Australian. It is world markets. It is most world equity markets in one place. If you want to trade China, you can trade China here. If you want to trade Europe, you can trade Europe here, UK, right? It's all here, guys. Japanese markets, Singapore, the whole lot's here, right? So it's your one-stop place in Australia where you can trade the world. There's not many platforms out there that can do that. Most of them are either just Australian or US or both, right? All right, so with this, what that means is we can now convert currency around. So my base currency is AUD, okay? So I can go from AUD to any one of these currencies. And the great thing here, guys, is we do not charge currency conversion fees, okay? Most other brokers, banks, you name it, all charge 50, 60 bips. And I'll show you what that means when I flip over and talk about brokerage, okay? We do not charge anything. All right, you just get charged spread, which is the difference between the bid and ask. Okay, most of you will know what bid and ask is. All right, so at any point, if I'm bullish the US dollar, I can just transfer the bulk of my funds across or back as I please. Okay, now when you're transacting into US stocks, it does it for you. Okay, so if I want to buy Goldman Sachs here, all right, I come in, I can just get my order pad up. Okay, it's as simple as just hitting trade, by the way. Searching Goldman Sachs, all right, it tells me how much USD I've got available to trade. But at the end of the day, all right, I've got 364 in AUD. Okay, so you can do an equity loan, all that sort of stuff. IB allows you to do all this, right? And because we're a provider of IB, you get access to all those services. Okay. Excuse me, sorry. All right, so now all we got to do is choose our quantity in shares or price. All right, you can do fractions, which means you can do half a share. Okay, you go in and start putting in the amount in a dollar value. Okay, and it'll transact the dollar value rather than the per shares. Here you get to choose different order types. This is the other thing I really, really like about this service is you can actually put stops in as well. Okay, you can hit profit targets and stop limits at the same time, right? So what you do is you come in and you pick your price. All right, so let's just say tonight when the market opens, I'm happy to get filled anywhere from the closing price of $3.97 all the way up to $3.99, for instance. Okay, I'll cap it out at that point. And this is $3.99 US. All right. So what happens is if I click on this price management algo, they will not place my trade into the market until there's sufficient bid and ask there to fill me between here and $3.99. Okay. If the share price drops, okay, on the open, you'll get filled at the best price. That's what the algo does for me. This is really, really good for derivatives and things like that as well. All right, I'm going to do this good to cancel because I'm just going to keep placing this trade every single night until it gets filled. Okay, so if it jumps above $3.99, I'm not going to get done. And then I'll leave that order in there just in case it does. Then what I'm going to do, guys, because I'm asleep all night every night, I don't want to be up watching the US markets. And most people don't want to be doing that unless you live in WA. The WA, the time works a lot better with the US markets. I must admit, daylight savings is pretty good, right? It means like, you know, I can get up at 6:30, 6 o'clock and get the end of the US market, which is great, right? But not non-daylight savings means, you know, you're getting up a bit earlier. But if you don't want to be doing that, right, all you've got to do is use this profit taker and stop loss levels. Right, it's just simple. It's very, very simple. Let's just say, you know, what was our profit target? I think it was 480. Okay, you can put that profit target straight in here. All right, make sure you go to good to cancel so that way it keeps going in. All right, every single night. All right, if you leave it for a day, it won't go in again. Then you can set your stop. All right, so wherever you're comfortable. So 380, good to cancel. Submit the order. Okay. It's as simple as that, guys. Right? You don't have to worry about the currency conversion. It'll do it in the background for you. All right. I so happen to have 33,000 there. Okay. But when this order's done tonight, whatever it doesn't have in USD, it automatically goes and grabs the currency at the time. and converts enough to fill the trade. Right? It's just that's how simple it is. You do not have to worry about currency conversion. And only time you worry about currency is if the currencies start moving. So you just keep an eye on it. Okay. So, if USD is starting to push up, okay, well, you can move a little bit more into USD. If you think USD is going to fall, well, you can move a little bit back to AUD, right? That's the only time you really have to worry. If you sell trades, okay, it's going to sell back to the currency that you've traded in. Then you've got to convert from there, right? Do you have to purchase US stocks after converting AUD? I think I've just answered that. Can you keep USD and other currencies in the account? Absolutely, yes, Ying. You can convert through to any of these currencies that I showed you before. Okay, here's your list. You can convert into any of those currencies and just let them sit there. Okay, no fees attached, and it's just the difference between the bid and ask. Neil, what does good to cancel mean and how does it work? Good to cancel means that order is going to keep going into market every single night until it gets filled. Okay. So you can see here, this is the Goldman Sachs order I just placed. Buy, limit to 399. So I do not want to allow this to go above 399. Okay. And then this order will be submitted every single night when the US market opens until it gets filled or until I tell it not to. Okay. And then same with these two orders, good to cancel. This sell order up at 480, it doesn't go into the market unless it hits 480, and it's the same as this stop. It'll only go in, okay, if the share price falls down to 380. So that's what's really cool about this platform is you can actually have predetermined stops. Okay. So I think I've answered Ying, sorry, I missed one of your questions there. Yes, it does have end of year tax reports. Okay. Under reporting here. Okay. So tax documents. Now, I'm not 100% sure how well it does it for Australia, okay, with dividends and things like that. I know the P&L is pretty good, okay, but yeah, I must admit I've got to look into that a little bit closer, personally, to see what's on offer. But they do have tax documents. It is a US platform though, so we always have to be careful of that. Okay, I'll have to look at that a bit more. Good question though, very good question. I'll definitely explore that for the next webcast. David, no, you do not have the full range of warrants on here. There's only a handful of warrants. It's not really a platform for warrants, guys, in Australia. To be honest, the platform's better for US than Australia. Okay, trading Australian shares and things like that's fine. But once you start going over to the derivative side, you can't quote requests for options, so it makes it very, very difficult. And you don't have many warrants in here at all, compared to the HIN-based platforms. Okay, hence why we offer both, right? Hence why we offer the full service Philip. This is not really full service, guys. Like, if you go into shortfall here on an options trade, you're going to get closed out, right? There's no 2-day settlement, 2 days to come up with the money, right? So that's kind of the difference here, right? Which platform hold the funds for this? Andrew, I'm not sure what you mean, mate. Please clarify that question just a little bit for me. Okay, so basically, let's come back here. Happy to keep answering questions, guys. Just keep shooting them through. So, this has watch lists as well. So this really sits beside the Emerald Equities platform really, really well, because in the Emerald Equities, you go through, you use the screeners, you pick your stocks, you do your fundamentals, you read your news, you do all that sort of analysis there. And then when it comes time to do your technicals, you switch across to Emerald. Okay, so sorry, not the actual platform, the trading platform. Okay, so basically here, you click on your stock out of your watch list. It's going to come up with a bit of a chart here. Okay, you can put your indicators and things like that on there. I must admit though, guys, it doesn't have a lot of history for some stocks here on this particular online platform. Okay, so you can see here it's coming back to about 2017, which might be enough for some of you. Okay, and this is where the other platform comes into play. There's a downloadable platform that can run on your computer. It is a little bit more advanced, okay? And I'll just quickly flash that up as well. So this is the Trader Workstation. Basically, it is a bit more advanced than the other, and you can see here the charts are a little bit more, it has a lot more data, a lot more friendly with the trend lines and things like that. Same sort of deal, watch lists, all that sort of stuff. Okay. So that's what I'm showing now, Neil. So this is the charting service that comes with the trading account. You don't have to pay anything for this. It is a 20-minute delayed charting package, and you've got your full suite of different technical indicators, trend lines, all the rest of it. But I must admit that the charting in the downloadable program is a lot better than the charting on the actual web browser version. Okay, this is good enough to look at on the run. All right, but if you want to do some really intensive TA, you're better off with the downloadable program. Okay, I use a little bit of both. Okay, I must admit I spend most of the time personally being a bit more experienced and used to having really good platforms like Iris and things like that. The Trader Workstation is probably a little bit more comparable. It's probably a little bit slower. You got to download it. There's a bit more mucking around. So for beginners, stick with the web browser. For more experienced people, you want to start playing around with the downloadable program. So basically, that's where you're at, guys. Okay, so what else do I need to show you here? Neil, I've answered your question. Yes, it has charting. I've got that in front of you now. Yep, Andrew, I'll let you come back and just explain your question when you have a moment, and I will be happy to jump in and answer that. So basically, guys, look, there's a little bit of fundamental data and stuff in here as well, but look, I mainly just use it for the watch list functionality, to keep track of my positions, okay, and move my currencies around, okay. This is a great platform to build a US and Australian merged portfolio, okay. No, Andrew, this has nothing to do with Phillip Capital. So this is a completely different service. So Phillip Capital is a full service broker. Okay, this is not a full service broker. And that's the key difference, right? So Phillip Capital is a HIN based. There's more cost involved with that. This is a US supplied platform on custodial, okay, which is very, very different, okay. Ying, you can have either or, okay. So delayed data is for free, okay. And the real-time data, it comes at a cost, okay. Very competitive cost, guys. I think US data is about $10 a month. US data is cheap compared to Australia, it really is. And then I think Aussie data's upgrade about 20 odd a month, something like that, okay. So look, there's pros and cons. I'll talk about the pros and cons in a minute when I get across to the brokerage and talking about currencies and things like that. As I said before, look, this platform is really good for equities, guys. Okay. For Australia, really good for equities and derivatives for the US. I wouldn't really use this as derivatives trading in the Australian market though. Okay. How do you put finances into it? Okay. So how do you put money in, right? So basically you just go in here, hit the deposit button, okay, follow the instructions, okay. Withdrawal, okay, being a custodial structure, you couple of days to withdraw out, you get one withdrawal a month, okay, or else you start paying a fee, all right. So sorry, it's taking a little bit to load. I might have clicked too many things at once. Oh, sorry, this is a paper trading account, so it's not going to allow me to demo that. But basically, it's just wire transfer or BPay, Andrew, to answer your question in with a precisely. Okay, so you can do eBay in or you can do wire transfer in. It takes about a day to appear, and then away you go. Okay. I've been using this a fair bit for equity trading, for my investment portfolio. It's been pretty good, to be honest. Hasn't missed a beat. All right, so let's come across and just talk about fees a little bit more. So we offer a DIY service here, okay? That means you're completely on your own. Only time we'll step in and help is if there's a problem with the platform. We are here for questions, but we won't sit on the phone with you for long periods of time to help you with the market, guys, okay? This is seriously, if you're going on the DIY fee schedule, okay, you're at it on your own. right? For Australian, it's low as 660 or up to 0.08% of the premium on the trade. Okay, so we're very competitive across the Australian market as a DIY player. And then if you have a look at the advisor model here, guys, this advisor model here, right, is basically what we do here is we place the trades for you. It's probably the best way of explaining it. So shoot an email across, shoot me a message on Skype, put a message in the message box that's attached to our website, and we'll just place the market order for you, right? It's really good for people that are busy or beginners into the market. All right, there's no advice attached to this. It is purely a transaction into the market. That is it, right? That's what the advisor fees are there. So that's for Australian, $33 or 0.22, okay, whatever's greater. Where we're very excited, okay, is in the US market. And I'm going to show you why, right, into overseas markets. We are one of the most competitive in US markets in Australia. Okay, I know there's free brokerage for the US, but I'll explain to you in a second why that's not necessarily a massive thing. Okay, so our DIY fees for the US market starts at $2. Okay, so minimum $2 or half a cent per share. So they charge per share over there. It's a little bit different to our market. Okay, so based on a trade on JP Morgan at $147 per share, okay, this is how I've come up with this this demonstration. So basically on a $1,000 trade, including FX fees, you're paying $2.94. If you compare that to ComSec, you're paying $19.95 USD to begin with. All right, so we're a lot cheaper than that. If you go across, you're even cheaper than South Wealth. Where we save you a lot of money is here. And this is what most people don't realize they're paying, by the way, is the FX fees. Okay, so ComSec, you pay this FX fee every single time you trade in and out of the US. All right, $6 on $1,000. Yeah, this is where they get you. Okay, with South Wealth and some of the other providers, you can keep the currency in USD, so you don't have to pay for it again. All right, but they will charge you 60 bips on the way over. Now, depending on your size, guys, if you've got a $50,000 bank, 60 bips is $300. Okay. All right. So think about that for a second. All right. So if you're doing a 50K trade, all right, it's going to cost you $313 with South Wealth, $704 with ANZ, $512 with ComSec, or $12.74 with us on JP Morgan. If you're trading a $2 stock, then things change a little bit, right? But most US stocks are 80, 100, Tesla's $1,000 a share, right? So yeah, you're not going to be trading a lot of shares, guys. Okay. All right. So I just want to explain this BIPS thing a little bit more. Okay, we've got a calculator down here that you can use. All right. So let's just say you're going from Australian to USD. All right. I think the current rate's a little bit lower than this now. All right, it might be 7. What did I have? There's 4.723. I think I saw it this morning, something around there. All right, so let's just say transferring 50,000 over. Okay, you're charging 60 bips, which is pretty much the going rate out there at the moment. What happens? What's this 60 bips mean? Instead of getting that 0.723, they're going to take it off here and give you only 0.717. Right, so that's where the 60 bips is. Okay, so what that means is you should be getting 36,150, but you're only getting 35,850. Okay, so you're losing $300. Now think about this for a second, guys. Okay, if we're charging, let's say you're doing $5,000 a trade. Okay, up here, let's have a look at this. $5,000 a trade. We're charging, how much are we charging? We are charging $2 still at that level, charging $2 still at that level. Okay, so, you know, $4.74 including currency fee, all right, for a $10,000 trade. All right, so let's have a look at this for a second. All right, $300 is what you're paying to convert your 50K over. All right, let's divide that by 5 to be fair. Okay, you could do 60 trades with us before you even get close to their currency conversion fee. 60 trades. Now, if you're building a portfolio, guys, are you going to do 60 trades in a year? I don't know, right? You might if you're a trader, okay? Can you see why we've chosen to go down this path with interactive brokers into the US? We could go the free route. We could, right? But we'd be charging like everybody else, okay? I think this is more of a fair way of going about it, okay? No currency conversion. There's no hidden fees there, guys, okay? All right. So $2 a trade. If you want advisor assisted, okay, once again, what that means is we place the trades for you. All right. If you're a beginner, if you're too busy, right, we place the trades for you. Okay. So all you need to do is give us a ring, send us an email, and we'll get the market trade into the market. It's really good for the US, right? Because we can help you place those stop loss orders, those profit taker orders, those bit more complex orders that you might not be 100% comfortable with straight away. All right. So it's just a matter of sort of picking what sort of fee schedule you want to go on to. You have multiple accounts. You can have one that has advisor assisted and then a separate account that you're going about it yourself, right? Once you open one, it's very easy to just duplicate and open another, okay? All right, so that's probably the main thing I wanted to go through with the trading. The questions come up about custodial a few times. What most people don't understand in Australia is all US trading in Australia is done through some form of custodial. Okay, and there's various different custodials out there providing this service. So trading US or not, it's the same. There's no difference in the risk, guys. Okay, at least with interactive brokers, we can keep an eye on their balance sheet each year, make sure they're still healthy, looking good, not doing anything stupid. Just looking through these questions again, I think I've covered everything off. All right, so basically, guys, look, that's the trading side. With the Emerald research side of things, okay, you saw, Sam ran through everything that we offer on that side of it. Basically, oh, this is an old slide, guys. My apologies. We don't charge that anymore. With the last few runs on the last few upgrades, we've been able to actually discount this right down. Okay, so $82.50 a month is what we're charging. I'll just flick straight over to the website. Actually, it might be better. My apologies. I jumped onto a slide that's a bit old. Okay, $82.50. You'll put GST on top of that, guys, is what you'll be paying if you want to go monthly. $8.90 if you want to pay for a full year in advance. Okay, so you get a little bit of a discount there if you just do it a whole year in advance for this. And that includes, you've got a weekly webcast every Thursday with Sam. He's going to run through the market, talk about his view on the market, talk about stocks. You can ask him questions about stocks that you're interested in. Okay. Then you've got, our recommendation service, US and Australian. You've got our scoring. You've got the fundamental data there. You've got 3 market views a day that gets emailed out to you. And I think that sort of briefly covers most of it, right? So look, guys, questions, please ask them now. Give us a call, send us an email. You can come straight to the website and just sign up if you're interested enough and you don't have questions. If you want to get involved on the trading side, just come to emeraldequities.com.au, go to trading sign up. Okay, and then all the information around the trading side of things you'll find through here. Okay, so if you want to know more about our brokerage, again, if you want to see those schedules, just click this button here midway down. If you want to know a bit more about the platforms, here are the 3 platforms. There is a mobile app. I did say there was a third, and I didn't talk about it. There's a mobile app both on Apple or Android devices. Okay, mobile app is super cool, guys. I trade from that app every morning when I wake up. When I can't be bothered coming downstairs and looking at my laptop, I just want to quickly check a few things. Jump on the mobile app, can adjust a few orders. The great thing here, guys, for the US, and this is what I love about the US trading through these platforms, all these 3 platforms talk to each other. So if I place an order through the web browser, okay, I can see that order on the mobile app. All right, so I can adjust it on the run. All right, so it's pretty cool for the US trading side of it with that. All right, so once again, if you want to sign up for an account, you can start that process just here. Okay. All you need to do is fill in these few details, and then we will send you an account opening email. If you do it tonight, we'll send it to you in the morning, right? If you do it tomorrow morning, you'll have it by the afternoon, right? So within usually around 12 hours of submitting this form, you'll get an account opening email. Okay. All right, that's probably really it from me, guys. If there's any other questions, please let me know now. Don't hesitate to touch base with myself, Sam. There's also Jared that's available to have a chat. Jared's really good if you want to have a chat with somebody to sort of work out where you want to go from here. So if you're a beginner investor, a beginner trader, he basically is a bit of an advocate across the business. He talks to people and helps direct people in the right direction. So if you call him and say, look, I'm interested in short-term trading, he's going to talk to you about the courses and about Trader Circle. If you're interested in portfolios or in fundamental analysis and things, he's going to talk to you about this. He'll help place you where we can best help you, I guess, right? He's not a salesperson, guys. He's not going to shove product down your throat. We're not like that, okay? All we're going to do is try and help you the best we can, right? You tell us what your problem is, you tell us what you need, and we're going to try and tell you the best way we can help you out to solve that, okay? That's what we're about. Okay, look, that's enough from me, guys. If there's any other questions, please shoot them through now. Otherwise, I will call it a night. So once again, thanks for listening in. Okay. All right, we'll call it. Bye for now, everyone.
Thanks very much, guys. Cheers.